Oh, well, hello. Wanted to tell you a story about venture capital through the perspective of one of the greatest failures of all time, and that is the Titanic. Here in Knoxville, we have a Titanic museum in Pigeon Forge that's just an amazing museum to visit with real relics, and you can go into this place where you feel like you're on the ship and the temperature is the same. It's an amazing experience. You feel like you're there. And of course, there's the popular Hollywood film Titanic. So at this museum, I bought this. It's a share certificate in the company that created the Titanic. It's called the International Mercantile Marine Company. This is, of course, a replica. It's not a real share certificate. I bought this in the museum, but it has a CUSIP number. And this is what a share certificate used to look like. Before electronic trading, people had paper certificates. They all kind of look like this. And they're all kind of fancy, and they have a gold seal and were printed on some nice paper. This would have been, even if it was real, pretty much worthless. It might be worth something like an artifact, but there's no value in the stock of the Titanic. Interestingly, the White Star Line continued its business, so the company didn't totally bankrupt, but the investors in that venture obviously would have written that off like a total loss. And I wanted to talk about this in the context of venture capital. What is venture capital? Everyone wants to know, what is the secret of startups? And venture capital is basically a risk venture. Not necessarily a startup, but in today's world, it's 99% startups. But let's take a different example of what is a venture. Christopher Columbus came to the United States. He was financed by the Queen of Spain and others, but the Queen was an important lead investor because without the Queen's support, other investors may not have come forth and provided support for Columbus. And he needed lots of money because coming to America in that time, there were no airplanes. He had to get a bunch of goods on the ship, and everything was kind of handmade. And so that was an expensive trip. And of course, the upside to investors, so they thought, was gold and the discovery of the New World. And that didn't exactly work out for Columbus like he hoped. But that's the idea of venture capital. You're basically investing money and you have risk capital to invest. So venture investors are typically high net worth individuals or institutions that have that type of capital to invest, but not necessarily. There are many cases where startups were founded with financing from friends and family, neighbors, spouse, close family members, cousins, maybe someone has a rich uncle. But that's the idea of what venture capital is. You take capital and you invest in some project, something new, something interesting, an exploration, going to Antarctica to explore things that have never been done before. And that usually takes a lot of capital. Anything new takes a lot of capital because it's not something you can just like go to Walmart and buy. You can't just, for example, go to Walmart and buy a device that will take you to Antarctica. So getting down there with special planes and everything else is very expensive. So that's the idea of venture capital, and I just wanted to share this share certificate with you from the Titanic. Not every venture is obviously going to win, but you strike gold on the ones that do. And all in all, when you average it all out, it's overall a pretty profitable business, and you just have to manage the risk properly and not end up at the bottom of the Atlantic.